U.S. stocks are on the rebound today after a volatile week. Joining me is Matt Cheslock to talk the market scoop. Hey, Matt, thanks for joining me. What's with the rebound today?
Well, yesterday's action was really good. It was really positive and constructive. Being down 600 and closing unchanged, and S&P was to the plus side. That was really good action considering. So I'd like to see the follow through today. Obviously, everyone wants to continue to see follow through for the next few days. But if we stay in the green for the next couple days and we don't get anything, over the weekend or anything out of our president as far as a destructive tweet. Maybe we weathered some of the storm here. We saw some massive capitulation in not only the equities, but in fixed income as well. And that was really alarming at first. But I think we got through. We held some of the lows as far as the equities go in the near term.
Why do you think buyers stepped in?
I think there was at points, look at technology for one. Technology really fueled the rebound yesterday. That was the strongest sector that we saw. Today, that's continued. So people, I'm assuming, found value. And they said, you know what, the trade impact isn't going to be as great as we think. And we're going to wait to hear from companies, especially. They just got done with the second quarter. So now they're going to reevaluate this whole headwinds as far as the trade goes. And if they come out with anything surprising, that stock will be affected probably negatively if they have to come out and reevaluate their numbers. But we weren't looking for the third and fourth quarter of this year to have this problem. We were hoping for this to be done. But right now we have to face it, and companies are going to be right in the crosshairs going into Q3 earnings.
And as we saw, China devalued its yuan. Matt, China's bank now owes more dollars than it is owed. Some sectors that are in danger there are financial services and real estate. I mean, how dangerous do you think that is?
It's dangerous when you start to I don't want to use the word manipulate in a negative sense, but manipulate your currency, and now you're being judged as that. That has a tendency historically to benefit you in the short term and not in the long term. You see a flight of capital out of your country. That's the major concern for China when people are taking their assets out of China and moving them elsewhere. So it's something you're going to want to keep an eye on. I'm not sure 7 is going to have the threshold that it used to have now that we've broken it and they've pegged it above that even today. So maybe there'll be another number down the line, but certainly psychologically, 7 was a huge number. Not anymore. That's just the way we are right now. You just move on from that, but it's going to play an enormous part going forward. They used that big trump card that they had, and I hate to use trump card, but that was one of their big arrows in their quiver to use, and they used it. It was effective for maybe a day or two. Now I don't know how much leverage they have on that going forward.
Matt, would you consider the U.S. cutting rates as, you kind of shrugged off currency manipulation. I mean, is that considered currency manipulation?
The Fed is supposed to be independent of that.
Yeah.
So I'm not going to say that's currency manipulation, but in effect, it is. We're not, but I don't think in this case it really is. We have to look at where the U.S. is compared to some of the other global countries out there. If the flight to safety yesterday was, buying German buns at negative 0.5%, that's scary when that's the flight to safety here. So, we have to take all that in consideration. That's why the bond market was just roiling yesterday. They didn't know what to do in the morning, and then we finally started to find some middle ground when we had our U.S. bond auction yesterday, and people said, we're not buying U.S. bonds, we're going to start buying stocks, and that's when the market really started to rally after that.
And that's where we got that. I have to say, following the options market, it showed that a lot of investors were betting on the VIX in August. So I was, kind of bragging to my friends, like, I think I want to go long VIX. And man, they were like making fun of me. You don't do that. It's so dangerous. What do you think about buying the VIX?
The VIX was probably before February of 2018, when we saw that huge volatility that occurred, VIX kind of changed, but it's still a pretty good indicator of what's going on. And the VIX gets kind of slow and kind of boring for a while at certain lows, and that's when you really have to start getting involved and saying, you know what, I'm going to buy insurance going forward. It doesn't look like it's going to work but suddenly you see 25% move, 30% move, back-to-back days. Those are enormous moves. You can make a lot of money on that, but you have to be a little bit ahead of the game, like you said. It can't just pick a spot and hope it works. You're looking longer term. You're saying, you know what, it's quieted down. The market is kind of toppy here. I want to get involved in the VIX, and the VIX shows that stabilization, that back when it was probably 13 or 14, right? And it looks like an easy trade with hindsight, but it does take a little while to shape up.
It does. Well, next time I'm going to trust my gut. Anyway, thank you so much, Matt, for joining me on Thursday. We love you. We'll see you on Twitter.
Yeah, enjoy the weekend.
Will do. Lots of fist pumping in Jersey.